Hi everyone, it's Marissa here from Rise High and
Lockie Turner, F and Turner Real Estate.
And we are here of course to bring you the most recent Adelaide property market update as we do every quarter, don't we, Lockie?
Yeah, well we do our best, Marissa, so let's see how we go to start the year off.
So January 2025, hard to believe it's already halfway through January. This year's already starting to fly and everyone's starting to trickle back from leave and get back into the hang of the work life again.
Yeah,
how are you
right.
finding things with the start of the year, Lockie?
Well, in terms of sales, we actually did a little bit something. This year we started and did something a little bit differently, where we launched several properties on New Year's Day. The reason we did that is because we find the customers, the buyers out there are very active over the holiday period, as we probably all are. We've probably got a little bit more time to look at social posts and and some of the real estate web portals and so on. So we launched several properties right at the start of the year. We've got auctions coming up next week, and the expiry of the time in which to make offers, which is the for sale method. And all the inquiry has been incredibly strong. We had 30 groups through one of our properties on Saturday, and we think all the properties are going to sell very, very well. So that's quite an interesting dynamic to see how the year's starting. It seems to just be starting where last year left off, so it's strong so far. Rent is the same, but I'll go through that in more detail shortly.
So, yeah, it's really interesting that you mentioned that, because from where we're sitting as well, and we'll talk about the stats in a minute, but demand still seems strong. Demand from buyers still seems strong, and that certainly is reflected in what you've just said in terms of you're seeing strong interest. Let's talk about demand and supply with Adelaide property market.
Yes.
How is that playing out? And then maybe we'll get into some of the growth stats, because there has been a bit of a change over the last quarter in December. But let's talk about, the demand and supply factors behind that change.
Well, I think Australia is in an interesting place right now where certain cities like Perth, Brisbane, Adelaide are the strongest markets. Interestingly, the bigger markets of Melbourne and Sydney have both gone down a little bit. So I think people are really looking at the three states I've mentioned, Perth for mining, Adelaide just for lifestyle and still relative affordability, Brisbane for lifestyle, as well as also becoming really the third tier of the capital cities in Australia behind Sydney and Melbourne. So they're all going really, really strongly, and we've still got the crisis essentially of the population increasing. I think immigration was at its highest point in Australia's history last year, and currently with over 500,000 people entering Australia from overseas. And of course, all this was done without the infrastructure in place. So we've still got a chronic undersupply, which is being sorted out, but it was always going to take a while, and we're still in the midst of all that. Interest rates, what are they doing? They might go down a tiny bit next month or in March. I don't think very much. So that might sort of even give the market even a little bit more of a growth. So I think this year really in sales, where we're looking at the market, is that we're just going to call it normal. It's a bit more normal, where the supply and demand is a bit more even for buyers and sellers. I think it still is swaying. I think it's still tipping in the seller's favour. I still think it's that market. The other thing,
but maybe not as much as it was during the COVID years.
Totally. So I think it's cooled a little bit, and in fact the national median data suggests that it has cooled a little bit as a national average. It's only gone down for the first time since December 2022 by 0.17, so not even half of 1%, but I think that's a sign of what's going on. So that's what's happening in sales anyway.
Let's just talk about the stats, because you said Australia nationally has sort of gone down a little bit over the December quarter. What's happened with the Adelaide market specifically?
Well, the Adelaide market in the last year-on-year annual returns actually gone up 13%, so 13%. And the other thing is, even though the national median value of property has gone down a little bit, not even half of 1%, it's still up 4.73% this time last year. So really what we're seeing is that, and there's a point I'd like to make in a minute, but is that it's gone down slightly, but just hardly at all, and the values that it has increased by are still in the market. The other thing I would say, and I've heard this so many times throughout my 20 years of selling real estate, there's so many people that go, I'm going to wait for the market to go down in value. I just don't think it will. It can't. If you look at the fundamentals, there's just too many people want too little of what is available for sale out there. So don't hesitate. I think we talked a little bit about, before we went live, about some of the options for buyers out there as well.
Yeah, we find that there's, a few main regrets that people have when it comes to property. One of those is, buying a property they can't afford to hold, but more likely a regret is waiting too long to get into the market and buy a property, and just that procrastination, thinking and waiting and hoping for the market to settle down or reduce, and then it doesn't happen. It just gets harder and harder and harder. And the other one is selling a property when they see how much that property goes up in value over time.
Gone up. Yeah, I think if you're selling I think if you're selling and getting straight back into the market, it's okay.
Then it's great.
But I think a lot of buyers do sort of look at the property market and kind of like the share market, and they think, I'm going to try and pick the bottom, and I don't want to buy at the top. That property market is proven throughout history and very, very steady. And if you look at all the fundamentals of Australia and its population growth and all the things that are going on, it will continue. So I'd be interested in hearing some of the tips you've got for buyers, particularly first-home buyers, where there's some government incentives and so on. So
I think that's what we've seen in the market as well, and that's probably driving some of the demand, and I think it will continue to drive demand moving forward. Is that there's a lot of advantages and benefits and opportunities out there for first-home buyers. The government's obviously responding to tighter living expenses, and they realise that it is getting harder for first home buyers, especially with the increase in values of properties, but there is a lot of support for them out there. There's also a lot happening over on the lending side, where banks are looking at new products, new innovative products, where they're giving specific cashbacks or helping out first home buyers towards their purchasing costs, and also offering much longer loan terms. So instead of a 30-year loan term, a 40-year loan term. Now you might be thinking, I don't want to be stuck in a 40-year loan, but it doesn't mean you have to stick it out for 40 years. What it does mean is that your serviceability, your ability to borrow the amount of money that you need to borrow on the income that you have, stretches so much further. And as you do make more income, you can pay that loan down at, more rapidly. But for the short term, getting into the market is going to be easier for first home buyers with these unique products that are starting to come out into the market. So,
wow. So I haven't, in all my time, I've never heard of a 40-year loan. It's always been very, very historically 30. Yeah. And I think you're absolutely spot on. You've really got to look at it as a tool. Yes. And the tool has been made more advantageous for a buyer. You categorically don't look at it as though, I'm going to have a loan for 40 years. A, you can pay it off. B, you could sell the asset in 5 or 10 years' time and the loan doesn't even matter, but you've bought an asset that is appreciating. So that's really what the tool of 40 years is allowing you, is more ability to buy in. So
that's right. Yeah. And for so many first home buyers, the struggle is their borrowing capacity. So there's two things. There's the deposit and there's the servicing. Deposit, that can be a bit of a challenge, but there's so many ways around that. So in fact, I'm running a seminar next week actually on how to get into your first home with little or no deposit. So there are so many opportunities.
What about the government incentives? So let's say like they're doing a whole lot of new land releases down on the Fleurieu, so all down near all Dinga Beach and Sellex Beach and so on. Can you buy a block of land and then there's a builder grant, there's a government grant?
Yes, exactly.
And then you get the 40-year loan. So you might never live down there.
Yes.
Right? But you could buy that, get all the incentives like crazy, and then build a house, rent it, never live in it, but you're in the market. That'd be a great thing to do. So it's called rent vesting, and that's a great way to get in.
We definitely see rent vesting is really popular. Depending on which government grants and things you're tapping into, there are some rules around it in terms of minimum time that you do have to actually live in the property.
Oh, there is a
minimum. But it depends on what you're accessing. But like you said, it is actually really possible to buy, if you're the right type of applicant, it's really possible to buy your first home with little or no deposit.
Yep.
So getting into the home, like people think you need to save a 10 or 20% deposit. It's just not the case.
And now you've got a 40-year loan and you've got all these tools. So the government actually, and the Fed and state governments all around the country are trying desperately to help first home owners to get in the market. So I think out there, if you're not already, really educate yourself or have a chat to the Rise High team and Marissa and find out all your options.
I might actually pop a link in the comments of this video to register for our seminar that's coming up, which is how to buy a house with little or no deposit, because that gives you, the top 10 best ways that you can, different ways that you can do it to go about it to actually get in the market. So that's great. We're getting a bit off topic, but I think it's really useful to know. I think first home buyers is going to be, you know, definitely something to look at this year in 2025. And we're still seeing strong demand from investors. How about you, Lockie? What are you seeing?
Yeah, we certainly are.
Space?
Yeah. So we've got a team here that's always adding new business, which are houses to manage for rent, and we're adding about 30 new investors a month, which is over 300 a year if you look at just what we're doing here at Turner Real Estate. So the demand is still quite strong.
Yes.
But I think if you're an investor, current, or you're thinking about investing, beautiful market, still relatively affordable nationally.
Yes.
Yields are very strong.
Yields are very strong.
More flexible options with loans if you need to do a bit of that as well. Yields are good. The capital growth will still be there. It's tempered slightly, but it will still be positive, I think, for this year and next. Yields aren't really going to go down either.
No.
The sweet spot if you're buying an investment property for rents is between sort of $400 and $600 per week. Then the quality of applicants in that range is much higher. Sort of 400 and 500 down. Where the quality of applicants is a little bit lower. The prestige portfolio of properties we manage, which are on average 1,000 plus a week, it's really amazing. Like the demand for that is really high as well. It just demonstrates the sort of the have and the have-nots, and that upper end market is very strong as well.
Wow.
Yeah.
So I think and I think what the last few years has shown everyone is that property is such a great asset to build wealth. If you buy well, you sit on it, you let the market do its thing, maybe you add value to it over time, but it is actually such a great value to grow wealth and have that passive income. And I think that's what's driving demand from investors. And I'm sure you've seen it as well. I think we've spoken about it in previous quarterly updates, where Adelaide's such an attractive investment option for interstate investors, especially from Melbourne and Sydney, where they just can't get the rental yields that we can get here.
Well, the capital growth is just so high, the capital value, and then the rent yield is lower, because of it. Honestly, and much more volatile markets as well in terms of property. Adelaide again, historically
slow and steady
is super. Well, not so slow anymore.
We haven't been so slow, but over the long term,
but over its history, it's been slow and steady, and it's frankly, apart from global shocks like the GFC or weird things like COVID. In the very immediate term after that, of course it went down, but historically it's just barely never gone down. And Sydney and Melbourne have always had peaks and troughs, always. And in fact, they're both down currently. Again, what's Adelaide doing? Surging ahead. There's lots of different stats here as well, but post-COVID, the Adelaide market's gone up 71%. So that's sort of the generational problem we've now have with young people trying to get into the market, which is again, sort of swaying back to all the help that's now being done, and for young buyers out there to think a little bit more creatively and understand what the government, state and federal are doing for them. So, not to make that a focus again, and it sounds like your seminar is going to be amazing, but these are all the reasons why Adelaide's still doing well.
A question that I actually often get asked, is this really bizarre? Like, was it just a post-COVID thing? Will this ever happen again? And when I reflect back on my investing journey, which I started in about 2001, exactly the same thing happened. 2001, 2002, 2003, it just went gangbusters.
Yeah, there was that growth. Yeah.
So we had that growth, about 20 years before, and that wasn't driven by a pandemic or anything.
Well, I tell you what, that wasn't, Arissa. That was I do like the Crows, but I like Port as well because they're an Adelaide team. But the Adelaide Crows won the grand final in '97 and 1998, and then we had a property boom after that.
You reckon that?
I don't know. It might have played a part.
It might have been something to do with it. Let's talk about rents. We have spoken a little bit about it, but are you still seeing really? Obviously, rents have skyrocketed in terms of increase of rent on all properties over the last couple of years. Are we starting to sort of see that slow down, but still see an increase? What are we seeing in terms of rentals? Can you tell us where that's heading?
Rent is absolutely, and already has, started about October last year. Rent yields have started to plateau. I think there's just an affordability issue going on, and people can only pay so much, and it's pretty much just evened out now. I mean, if you look at the national figures, it's gone down slightly. But if we look at my latest stats down here, I mean, the vacancy rate nationally, again, is less than 1% at 0.7%. Average market rent, $616 per week. Our own data, and this is where we think it's an affordability problem, is that there are houses to rent. There's heaps of houses to rent. We alone have 53 houses on the market. But really it depends on the quality of the applications and affordability as to whether those people are able to pay the rents that some of our landlords are asking, which I'm sure are very, very reasonable figures as well. Days on market has gone out slightly longer now, it's 24 days on market on average, which is up from 17 days.
Yeah.
So that's interesting, isn't it?
Yeah.
The average rent as well is it's almost $630. This is for Turner Real Estate, up from $596.
Yeah.
So it's gone up almost $30 there as well. This is interesting. Tenant inquiries from the last 30 days are 2,485, down from almost 3,000. So rental inquiries down 500 from month to month. That's from November to December. So
it's going to be interesting to see what happens in this space. I mean, we talked about migration. With migration, most of those migrants need to rent initially.
Yes.
But maybe more people are starting to get into the market or adjust, you know, their living to accommodate for the rental crisis that we have been having.
Yeah. Well, I think mainly when they enter the country they rent, and that's why the rents have gone up so much. But it's certainly it rising to now it's like, oh, we've reached like a plateau, and now we've got to be a bit more realistic, which is why the days on market with rent have actually gone up a little bit, because there's an adjustment needing to be done from what's being asked for rent and what's actually being achieved, and so it's a little bit more education time until we reach the right level. So that would, in fact, would indicate that rents are even sort of going down slightly, or that what's being asked now just needs to be more realistic.
Yeah, absolutely.
Which is great for renters.
We might
and the yields are still strong for investors. So.
They are still strong, yeah, absolutely. So let's just wrap it up with tip for buyers, tip for sellers, and let's wrap it up with those.
I think we've probably gone pretty hard already on tips for buyers, particularly first home buyers, and I think your seminar is really where it's at.
Yeah.
Of course, like with Turner and other major agencies around the state, I'm not going to name all of our competitors, Marissa, but they have become very good with the tech age at making sure that you register with a buyer. Ours is called Turner Exclusive. Send us an email, we'll make sure we get you as a buyer in our system, and you will be automatically emailed based on where you want to buy and what your budget is. All the properties that we list, first and foremost, sometimes properties that we sell only go on that site, so, and they're not even reaching realestate.com.au, and that's the same with other agencies. So that's definitely what needs to be done now by the modern buyer. It used to be paper, and then everyone was on at least realestate.com.au, and most people are still on REA, but now agencies are now marketing a lot first. So that is, I often say that, and that must be done. Obviously, get your loan sorted out, see what you're capable of doing. That 40-year loan sounds amazing. Talk about some bridging finance as well. A lot of people want to hold their property, buy first, and then sell their property. Bridging is critical.
Yeah.
Set yourself up. Work
the
out.
Subject to sale clauses is very unattractive for
Very unattractive. You're way better at just getting a market appraisal from one of our team at Turner. We'll be super honest. We'll be based on all factual data.
Yeah.
Find out where your property might sit in value. Go and get it pre-approved. Take the plunge, buy the property. A lot of the good ones sell at auction anyway, and you have to buy unconditionally. So get pre-approval, and then get yours on the market, and then you've got the protection fallback of that of a pre-approval loan. So that's for buyers
and sellers. Time to sell.
Sellers, like the very, very good time to sell. Demand's good. Can't see the market changing too much this year. I think it's going to be good all year. But just make sure you do your presentation of your property. It makes an enormous difference. Just like if you're going to sell your car, you blacken the tyres and you vacuum and so on. You've got to really have a well-presented property. Spend a little bit on marketing. While we always sort of encourage as a first step to be on Turner Exclusive first, it's probably best you do widely market in most instances on the major portals to get your full market. Sometimes a saving of literally a few dollars as a percentage in marketing can be the difference between $100 or even $10,000 in a sale price. So generally tell the whole market and present well, but get good honest advice. Get your pricing right from the first day on the market. You want to make a great first impression. So anyone here at Turner, I'm happy to talk to you about that.
Excellent. Well, thank you, Lockie. Another informative property market update. So thanks for tuning in. As always, please feel free to reach out to the team at Rise High or the team at Turner for any of your property related questions. We would love to help. And we will see you again in about 3 months for the next quarterly market update.
Love it. Yeah.
Thank you so much, and have a good, happy start to 2025, everyone. Bye.